Welcome back. 2024 is a big year. You have the Olympics in Paris next month. The presidential election is on the horizon. And November, and that's, of course, right here in the USA.
Millions of Americans are also thinking about how this election may impact their bottom line. Here to talk about a few financial strategies you can use this election season is our great friend, investment advisor, JBBRYAN. Welcome back.
It's so good to see you both. I love this topic because it's so much concern about this. But I have a question before you ask me a question.
Okay.
If you invested $10,000 in 1950, how much do you think it would be worth today?
A lot.
Yeah.
What do you think? What didn't you? Because you were alive. She wasn't alive. So.
Oh man, you're gonna put me on the spot.
What do you think? Just guess.
10,000 in 1950.
Yeah.
I'm gonna say.
You're gonna get mad at your parents.
1.5 million.
And this is using the S&P 500 as an example. To use it. Yeah, you're right in the middle.
Okay.
So you would have won the wheel, though, but it's actually over $3 million.
Yeah. Okay.
Yeah, so when we think about that, think about how many elections went on during that time from 1950 in different political parties and all that to happen. So my point is to say that the investor that focuses on the long term, that goes through these elections, actually ends up being, has a greater chance, I should say, of being the winner.
And carry on.
That's right, that's right.
So my mom used to say, it's an election year, the economy's going to get better. That was always the thing. It's like, oh, gas prices will go down, things will be better for a while because it's an election year.
Exactly. What she says, she's probably talking about like so much more positive information will be released to the public. Right. And she's right. Like, according to the stats from Forbes and Bloomberg and BlackRock and Y Charts and the companies that are actually following this history, that in the election year you actually do have a lower chance of actually losing money based on historical performance of the S&P 500. But I also wonder if that's because we don't have as many election years as we have non-election years.
Sure.
That makes
3 to 1. Yeah.
Exactly right. Yeah. But she's right. You're more likely to have a positive election year. But as we go closer to September, it's shown in research that we're going to have a lot of volatility. We should expect volatility up till election day through the rest of the year from September to through November. It's like that's a volatile time for investors. Again, focusing on your long-term financial goals will be your best bet because, as Bill's mother was saying, like the more of what investors are looking for is actually economic news. So something that comes out really bad economically has a much higher effect on investments and stock prices. Higher inflation. You saw over the last few weeks that indications of lower inflation have had such a positive effect. So if we, so those are the things that really affect it more than which political party is going to be in office. And I think I realize
both parties want it to be better as they get closer to election or re-election.
That's right. That's right. But even through the parties from 1950 going all the way back to 1926, the S&P 500 being tracked, that you're gonna, there's positive growth there. So even if you stay through the Democrats and you stay through the Republicans and you stay through, that is the investor historically that did better, that focused on the long term.
So don't be alarmed if you're seeing this going up and down, the information being positive or negative, shifting off, and you're saying hold tight.
That's right.
Stick with it. You're
right.
focusing on the long term. This is but
That's
for
right.
a moment. And as you mentioned, election years are 1, and non-elections are 3.
Given that they have a good quality investment, some people do have bad investments during an election year.
So don't ignore that part.
That's
Focus
right.
on that.
Because they'll say, well, she said, just stay in. Given this quality investments, and all of this is based on the S&P 500. So when they say, oh, the market over the long term, or the market did 10,000, went to 3 million, they're referring to the 500 largest companies in the U.S. over that time period.
Big dogs will probably be okay, and if you're working with them. So as an individual who doesn't follow this kind of stuff, obviously we need somebody like you to help us so that investment is the right investment to weather the storm.
Yeah, and then one could argue, she just said right there, all we have to do is do the S&P 500, we'll be fine. So yes, what our goal as your financial advisor, investment advisor, is to outperform that. To help you do better than that. So there's theoretically someone who had a great investment advisor, 1950, and they have versus 3 million, they have 6 million. And there might be a more conservative investor that says, I'm not going to put all that, in just stocks, certainly. So they would have had some of it in bonds. And so they would have had lower than just the S&P, because that's 100% equity portfolio. So when you say 10,000 grew to 3 million, your family may have been way more conservative than that. Because they remembered the Great Depression, and they saw all of these things, and wars happened since then, that it would take a lot of heart to stay through the dips that they saw over the short term.
So the election year is coming in November, obviously, and things will heat up now in the summertime with the campaigns and all of that. So what should we expect? Is it going to be different, one versus the other? Because we're down to a choice between one or the other at this point. So what can we expect?
The best thing to do is to draw politics out of your financial and investment decisions. Just pull it out. Focus on the quality of the investment. Focus on your specific goals, and focus on using technology to determine your risk tolerance. It's easy for us now to match investments to your actual risk tolerance and how you feel. So there's focus on things that are unique to you and your family and your financial goals, versus if this person wins, I'm going to get out of the market because it's the end. Focus on, I'm saving for my children going to college 20 years from now. So that you'll actually have to focus on beyond this, because the stock moves based on long-term versus future profits for that particular company. What's down the road? So don't allow today's temporary changes, or this temporary person in the White House, or that to determine your long-term.
I think taking politics out of everything's probably a good idea.
That's right. That's right. Take it out of your love life, and take it out of the family, and take it out of the church. Definitely take it out of the church, and take it and just take it out.
Money as well.
That's right.
Thank you so much. JBBRYAN offers free financial workshops and webinars each Wednesday evening and Sunday evening. It's free, but registration is required. For more information, visit our show website by later today at virginiathismorning.com.
Our live show returns in less than 3 minutes. We'll see you on the other side of a quick break.